to another video. In this video, we're going to be doing support and resistance key levels. I'll be showing you how to use support and resistance key levels in trading. All right, it's just one possible element of confluence that you could use. So let's see how to mark support and resistance key levels and how to trade with them. Now, support and resistance key levels, of course, you know what they are. You can mark out those key levels in two ways. Either you use horizontal ray, this line like this, to mark it. So you look for where the market reacts very well in the past. Okay, so assuming this part of the chart hasn't happened, like let's say this part of the chart, assuming this part of the chart hasn't happened, like from here all the way up hasn't happened. Now we want to use support and resistance to trade off that place. Now you can see that you look for where the market reacts very well. You can see that when the market came here, it reacted here, touched here, pushed up, came back, touched it, pushed up. When it broke it, it played around it. This is an overextension here, dropped down. When it came here, touched it, dropped down. So when it finally broke it now you will now combine this with a break and retest. So when it broke it, it retested back to that line. Can you see that? So assuming this side like this hadn't happened before, you'll be able to make profit from trading support and resistance key levels like this. You put your entry around here based on other confluences, and then you adjust your stop loss to be below it, a little bit below it. All right. Then you can place your TP in the next key level. This is the next key level here. You can place your TP in this next key level, and then something like this. You can adjust it like this. So guys, you can see this is a good 1:5 risk to reward. Means that if you are risking anything, you are going to make ×5 of it by trading this simple support and resistance strategy. So you combine it actually with other confluences. I've thought about how to use Fibonacci before. If you use Fibonacci combined with other of the confluences, you can see that it's actually around 618. Or you can, sorry, let's say you can this. So you can see that it's actually around 618 Fibonacci level. So by that you have 3 confluences here already that you are trading with. And if you want to look for more, if you draw, you can see guys, if you draw a trend line like this, you can see that this is a very high probability setup, because you have trend line, you have Fibonacci, you have support and resistance, you have break and retests. All right, that's why you don't use this support and resistance alone. You use it in combination with other elements of the confluences. But if you are traded off like this, you will see that you make profit. Now, but for me, I don't use, I use this horizontal ray sometimes. Now, when you use horizontal ray, try to label it so that you won't get confused. If you double click on it, then look at it. This is 1 hour time frame. So just write 1 hour there, 1H on it, so that you will know from which time frame you drew it. So as you can see, guys, it has been labeled 1 hour. So if I'm trading now and then I see the market reacting or moving, I know that this zone I drew is from 1 hour. So you can go on and on, join in different time frame. Me, I love to use box, rectangle 2 instead of this. I only use this sometimes, but then I use rectangle 2 like this instead of that. I can now remove this. So you can see, guys. Now let's keep marking key support and resistance levels to see how you can trade it off in the market. Let's go back and back to look for support and resistance levels and see how you could trade them in a live market. Now, if you look at this place, you can also find a support and resistance key levels around this place that the market was respecting long time. market was respecting long time. You can see. So guys, you see that when the market came here, it respected it, respected it, respected it. When it broke it, respected it, did an overextension here, but respected it. So now, if you want to trade from here now, guys, if you had even this place hasn't happened before now, and you want to trade from there, what do you do? Now, what you do is that when the market broke this place and is coming to retest, you can use your Fibonacci to check out the retest. All right. You use this elements of break and support and resistance in consonance to break and retest and other things. So you can see that this our zone is around 0.5 Fibonacci key level. Are you seeing it now? So what we will do right now is that if you are to sell, if you are to buy from that zone, since there is a break, if you were to buy, if you were to long from that zone, you will see that put your a little bit below it, put your stop loss a little bit below it. You'll see that you'll be able to make at least here, put the TP on the next key level, which is this one here. This is the next key level. So you put it there on the next key level, around the next key levels. So guys, as you can see, this is a good 1:4 risk to reward, meaning that anything you are risking, you are going to make ×4 of it by trading this simple support and resistance strategy. So let's keep going back on the chart to see how we can trade off support and resistance key levels in order to make profits. So right now, I can find another support and resistance key level here. It all depends on you, all right? It all depends on you, how you are able to look very well to find the key levels, all right? Now, if you are trying to draw and you find out that you are not really catching it, then you can as well leave it there. Right now, okay, let's look at this place. The market was actually respecting this place, respected it here, respected it here, and then respected it here around this place. So when the market broke, this is like just like a immediate breakout. But I think if you go to the smaller time frame, you see a retest there. But I don't trade immediate breakouts, all right? But then just to show us how to trade, how this support and resistance key level works. So you find out zones where the market reacted very well. I think this one is better than the other one. So you can see guys, that the market touched it here, touched it here, touched it here. Now, if I wanted taking a sell, all right? If I wanted taking a sell, then when I see that the market has been respecting it and then probably came here and formed a bearish engulfing here. Bearish engulfing is a sign that the sell momentum is still very strong. So I could as well, at that point, I can short from that point since it's showing me that, hey, the sell momentum is strong. So I'll place my stop loss a little bit above that place and then my TP in the next key level, which is this one here. All right. This is just a quick one. And as you can see, guys, when the market dropped, it gave us a quick 1 to 2 risk to reward there. A quick one there, 1:2. It means anything you are risking, you are going to make ×2 of it from that trade. All right, so let's keep looking for sweet support and resistance key levels. Very, very good ones. Some are not very good, but you would want to find the ones that are good. It gives you a chance of having a high probability setup. All right, now guys, you can see that the market respected here very well also. Respected it, and then respected it here. Now this is actually a kind of triple top like that, and triple top is like a pattern, not actually a triple top anyway, because when you draw a line like this, it becomes another chart pattern. All right, that's not what I'm focusing on right now, but let's try to combine that there with another element of the confluence and see what we got there. Okay, assuming I want to combine it with something like this, like this is like a trend line. All right, now on the normal, when I see something like this, some of you might be confused, but when I see something like this, I actually know what it is. All right, this is telling you that this zone is still strong because it has not broken. Where is it? Hasn't actually broken, right? So when you see, this is a signal for me. So when the market comes around it and then it's refusing to break like this, I see this pattern being created like this, because chart patterns also have meaning, but that's not what I'm talking about right now. But if you are sold off that point, you are still going to make profit, but you keep going down and down. Now, I don't just mark support and resistance and trade every support and resistance I see. There are some that are better than others, and me, I will want to focus on high probability setups. High probability setups are those ones that have more element of your confluences. So now, guys, assuming this place hadn't happened, let's see. Assuming this place hadn't happened like this, from here all the way inside this rectangle like this, or that square, you can see that this zone was being respected on several occasions. The market respected it here, and it's been respecting it all through this place. Now, when it finally broke and retested, you can now see that there's a trend line here. And if you use, see the trend line coming like this. Now, if you use Fibonacci, you will see that this setup is a high probability setup, and these are the kind of setup I love to take, guys. High probability setup. So you can see that the zone is around this either the 618 or the 0.5 key level. All right, golden level of Fibonacci. All right, so you can see that the 618 touches the trend line well. So what I would want to do in this trade, if I see this kind of opportunity, you risk as much as you can. Remember, it's good to have a healthy risk management. All right, so you can also see that bearish engulfing that happened there, indicating a good sell momentum. So usually me, I would like to enter from here. This is sniper entry. All right, but some people want to wait for the candlestick to, like this bearish candlestick, and then they will enter like this. You still make profit, but then it reduces your risk to reward. So me, I would like to catch a sniper entry like this, aggressive entry. I would like to take an aggressive entry like this, and even if you put it here, you can see that it's still at least 1:2.5. All right, 1:2.5 or 1:2.5 risk to reward. You will still make profit, but then I would like to take, since that zone has been respected a long time, I would like to drag all the way down to a good key level. Let's say this one, this side here, and it gives me 1 to 3. So however you do it, guys, so this is how to use support and resistance. You can go back to your chart and practice over and over and over and over again how to use this. Now let me draw this last one. You can see this zone have been respected for a while. The market respected it here, it played here, actually respected it here. You see that? So when the market in consonance with other charts, in consonance with other patterns, if you're using others, you could as well try to in alignment with other patterns there. So assuming, trend line is not balanced. So remember, your trend line must touch at least 2 highs. That's in a downtrend like this. So once the market came around here, so assuming this place hadn't happened, like here, like this, from here all the way here. When the market broke this zone, when it broke the zone and retested, you can see it's came around the trend line. If you use Fibonacci, you will still see that that's a sweet entry point to sell off from. So when you short, if you short from around that key level, that support and resistance key levels, you'll find out that just keep your stop loss a little bit above the key level and then the trend line, since that's a combination. And then you see that I would like to keep my put my stop loss around my TP around this level here. All right, that's here. So I will drag my TP down all the way around that place. So that's 1:4.5, or I'll even drag it down here. That 1:5. So you can see 1:5. So guys, imagine you trade this, you'll be making a profit of 1:5, meaning that whatever you are risking, you'll be making ×5 of it. You can still check with Fibonacci. Remember that I don't just use, or you don't just use one, you don't just know. You make sure that you combine it with other confluence. So when you use Fibonacci, you can see that 0.5 golden level of the Fibonacci is around that place. And oh my God, that's a sweet entry. And then you just make smooth profit like that. So guys, that is it for this support and resistance key levels. I'll still do other videos on other chart patterns, the break and retest of them and that. So thank you guys for being watching this video. Catch you in the next.